we're at a critical juncture right here. If it loses that 200-day and then the 200-day moving average begins to slope down with price below a down-sloping 200-day moving average, almost all technical analysts would call that a downtrend. And when you're in a downtrend, those algorithms that we talked about earlier tend to sell the rallies instead of buy the dips. That would certainly be bearish for the stock market if that were to happen.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Steve Penny from the Silver Chartist. Steve, thank you so much for joining us today.
You bet, Elijah. Thanks for inviting me back. It's always fun to speak with you and connect with your audience. So look forward to a good conversation.
Definitely. I'd like to talk about gold and silver as we're seeing this rally today on Monday the 7th. If you'd like to share some of the charts with us, and just a reminder again for our viewer that you're one of our affiliates, so people can follow the affiliate link Silver Chartist Liberty if they'd like to sign up.
We are seeing some encouraging price action as I pull up these charts. Silver's up about 60 cents as we speak. Gold's up 1% or 2%. But what's interesting about this gold chart as I pull it up is there's a very well-defined triangle pattern that a lot of people are talking about. But what I find especially interesting is that this triangle pattern should resolve right around the next FOMC meeting in March 15th, where the Fed is expected to begin raising rates. And I think they probably will. I think they will raise rates in March. And if you can see my screen here, here's that triangle pattern that I'm referencing. And, we've got initial support right at the lower rail of that triangle pattern. And this apex will be reached right about the midpoint of March. So I think that's very interesting. In the short term, if you go back and look at the beginning of prior rate hike cycles, the last one being December 2015, first of all, those beginning of rate hike cycles tend to mark major trend changes in the metals and mark major bottoms. That happened within a few days back in December 2015. And then what happens, the metals tend to grind higher as they raise nominal rates, a couple, they get a few in, and then they inevitably are forced to reverse course. And I expect that to happen again this time. And that's when you see the big moves. And that's when this time around, I think we're likely to see new all-time highs in gold and even silver when they reverse course. Now, that's a little bit of a longer-term forecast, a few quarters out, but that's kind of how I'm thinking over the next, 6+ months. Silver on this chart, I just kind of zoomed out a little bit. And so we can see this very well-defined downtrend channel. I call it the silver squeeze downtrend channel because it really began on February 1st of last year. And we've been in this very well-defined downtrend channel. Right now, we're sitting right in the middle of it. So we're kind of awaiting clarity here on silver as far as a technical perspective. We've got major support at $21.41. And then the major resistance level to watch is the upper rail of this downtrend channel that you can see here on the daily chart. And just to show your audience the significance of that 200-day moving average, look at the last 3 times we rallied up, tapped that 200-day, and failed. So you can just see the significance of this simple line right here. And I think this line carries so much significance because it's an input into these institutional trading algorithms that really dominate the paper silver market. So you can see that 200-day right there. We rallied up a couple weeks ago to within a penny or two, failed, and then we formed this little short-term triangle pattern, and which is encouraging that we're breaking out above that today. So I think we're likely to see another retest of that 200-day moving average in the weeks ahead. Getting back above that would be a significant technical development.
And what do you think is driving the movement we're seeing today with silver riding that $23 line and then gold around $18.20?
Well, we can speculate as to catalysts. Here's one theory. Like I just highlighted, that leading up to rate hike cycles, the metals tend to sell off and then rally. Well, eventually, when a pattern becomes so obvious, people anticipate that in advance. So is it possible that traders and investors are anticipating that exact thing playing out and they're buying in advance of the rate hike cycle? That's certainly possible. And that would be bullish if that's the case. And that's where it becomes, strategy becomes important, because a lot of people overtrade. And I think it's important to just have a longer term portfolio where you just sit and wait, because a lot of these moves are going to catch people off guard. And then if you're inclined to trade, do so with a smaller part of your portfolio. That's what I personally do.
If we kind of look at gold versus the stock market, your perspective on that and where we stand right now.
Yeah, this is a chart I'm watching very closely, and I have been for the last few months. Number one, because gold and silver are extremely undervalued relative to general equities. That's no secret. However, what I'm really looking for in the shorter time frames is for the metals to begin outperforming the stock market, because that outperformance is what's going to attract the generalist investors, the people who don't really understand debt-based fiat currency and all that. They just are chasing performance. And if we can see gold begin to break out versus stocks, I think that's going to attract a lot of momentum to the upside. And we could be beginning to see that right now. The chart I have up here goes back over 40 years. So this just gives you kind of a bird's eye view of where we are. And bull markets tend to peak at a 1-to-1 Dow gold ratio. 1980, gold topped at 850, the Dow bottomed at 850. There's your 1-to-1 ratio. And I think we're likely to see that again, even if it's just for a very brief period of time. And then when you zoom in on this chart, yeah, gold right here is trying to break out against this against the Dow Jones on this shorter time frame here. We broke out above this downtrend line. Now, that's just a zoomed in view. Let's see if that trend can continue and gain some momentum. But that's something I'm watching very closely. And, we can take a look at a chart for the general equities market, the S&P 500, if you'd like as well.
It seems like we are seeing really since the beginning of the year a pullback in the general stock market. Mm-hmm. And you can definitely see this on the S&P chart that you have pulled up right now.
Yeah, absolutely. I've been waiting for a while for a pullback to this 200-day moving average. We've just been due for one. General equities have never been so overvalued on a fundamental basis and on a technical basis. They were overbought in multiple time frames. So we're due for this pullback. Now the question remains, in this bubble economy, things can last longer than you might expect. So is it possible we go up and make new all-time highs again? Yeah, I think so. And if that were to happen, you can see this red line here. In this chart, it got a little bit skewed, but if you raise that a little bit, it would be more accurate. But, that's where, if you're an aggressive shorter-term trader, that's where I look to take short positions off of that resistance. So if we get back up there, that's where I might look to short stocks again. But right now, we're at a critical juncture, hovering right above that 200-day moving average in the S&P.
And we do see that it actually broke below that, and we're seeing a bit of a bounce. How crucial is that that the S&P actually broke below its 200-day moving average?
Well, that was a significant technical development, but it reclaimed it quickly. So that's where I say we're at a critical juncture right here. If it loses that 200-day and then the 200-day moving average begins to slope down with price below a down-sloping 200-day moving average, almost all technical analysts would call that a downtrend. And when you're in a downtrend, those algorithms that we talked about earlier tend to sell the rallies instead of buy the dips. So that's something to watch closely if price gets below a declining 200-day moving average. We're not there yet, but that would certainly be bearish for the stock market if that were to happen.
What we've talked about many times before is that platinum seems to be undervalued, especially with respect to gold because it's under gold's price. But also with respect to silver, there's a bullish case for platinum as well. Your perspective on the platinum-silver ratio right now? Yeah,
I'm very bullish on platinum over the intermediate term as a speculative investment. Sometimes when I highlight how platinum is more undervalued to silver, people say, oh, you're the silver chartist. You should be more bullish on silver. And I am. I view silver as a much lower risk trade because I think we're headed into a currency crisis and platinum has a much larger industrial component. However, if you just look at the chart on a relative basis, a ratio chart, you can see that platinum is wildly undervalued relative to almost everything, including silver. And if we get back to the peak of this ratio, that would mean platinum outperforms silver by a factor of 5. Is that possible? Certainly. So I think for me, it's worth having a small speculative position. And my favorite way to do that is with physical metal, because it's really hard to find quality platinum mining stocks because most platinum is found in like polymetallic deposits that are associated with more industrial metals like nickel and things like that.
It is striking to see that platinum-silver ratio and how much it's fallen really since, I guess it goes all the way back to around the early 2000s. It's a third of where it was back then. So what are some of the driving factors of that?
Yeah, so I think what happened in 2015, your listeners may remember the Dieselgate crisis with Volkswagen, and platinum is primarily used in diesel catalytic converters, and then regular gas engines use palladium. Now, they can be substituted on a one-for-one basis easily. That's a fairly easy substitution to make. So I think the world kind of swore off, platinum's done because we're going to steer away from diesel. We got these electric vehicles coming. And I think that got way overdone to the downside. Excuse me. And the potential bullish catalysts have just been overlooked. For example, substitution. I think we're going to start to see a lot of substitution where these automakers start using platinum in their gasoline engines instead of palladium. Why not? I mean, it's half the price of palladium right now, less than half. Also, you've got this hydrogen technology, green energy that uses a tremendous amount of platinum. And then I don't think the investment potential is being priced in as well. I mean, platinum is a tiny, tiny market. So if just a small number of investors say, hey, you know what, I want a little bit of exposure to platinum, that alone would be enough to move the price. So platinum, in my opinion, is worth considering a smaller speculative position.
No, when it comes to the mining sector, I know it's been hit hard recently as we've seen gold and silver pretty much go sideways. As we're seeing this bounce, where do you think the mining sector stands right now for the gold stocks and the silver stocks?
If you look at GDX or SILJ, some of the ETFs, it's kind of hard to find any clear patterns that give you predictive power. However, you can say that we're oversold and we're just above major long-term support. So here's GDX, and you can see this $30 area, give or take $1 or $2, has been long-term support going back to 2013. It was resistance. We broke above it, and now it's major support here. You can see on the RSI, we're kind of in no man's land. And we are approaching the apex of this triangle pattern, which happens to coincide closely with the next March FOMC meeting. So I guess my thoughts on the mining stocks, they're undervalued. Could they go a little bit lower? Absolutely. I think we're going to see volatility over the next few weeks. And if you have a longer term time horizon, I think you'll be handsomely rewarded by buying near these levels, even though they could dip lower.
You mentioned earlier about the gold Dow ratio and how you do see eventually gold really reclaiming that 1-to-1 ratio with the Dow, which seems like a tremendous upside for gold. If we do see that, what do you see for the mining sector?
It's almost embarrassing to say the potential for some of these mining stocks, because if we return to that ratio, that historic ratio of 1-to-1, that would mean gold outperforms the Dow by a factor of 20 from current levels. It's even more stunning if you look at silver. If silver returns to the ratio it was at in 1980, that would mean silver outperforms general equities by a factor of 50. Now, if silver is going to outperform stocks by 50, you can just imagine what the mining stocks might do. Now, that said, I think once we get above $50 silver, the world is going to be even more unstable than it is right now, unfortunately. And the risks to holding these mining stocks is going to increase. So personally, I think there's a lot of money to be made between here and $50 silver or $3,000 gold in the mining stocks. But personally, I'm going to be scaling out of mining stocks and into physical metal as we get to these, price points that we're all talking about in the metals, north of $50 silver. I'm going to hold on to some, but, be scaling out. Hopefully that kind of answers that question.
With respect to the US dollar, I know that's also an indicator that a lot of people look at to kind of signal when precious metals might be ready to move. Where are we right now?
Yeah, I think you're exactly right. I think of the dollar, it's either a headwind or tailwind. I mean, the metals can rally in unison with the dollar. It's a headwind if the dollar is rising. There are plenty of historical examples where they do rise in unison. Early 2000s is one example. But looking at this dollar chart here, this goes back to mid-2020. And you can see we had this rounded bottom here. We broke through 94.65 resistance. That's now major support. Came back and back tested that support perfectly. And I would look for another back test of that. Once we get below 94.65, I think we can say the trend is back down in the dollar. But for now, the trend is up, and it's possible we see one more higher high. I think that's a likely scenario leading up to the March FOMC before the dollar changes trend and reverses lower.
The three commodities you really focus on for Silver Chartist is gold, silver, and uranium. So if you could share with our viewers kind of the story you're seeing right now in uranium. It seems like we have, for the last year or so, really seen a bullish trend.
Yeah, for sure. The price of uranium itself, the metal, bottomed in 2016, and it's been trending higher. But in 2016, even though the metal bottomed, the uranium stocks continued to trend lower, which created this divergence. And I think we're seeing the uranium equities in the last year or so have played this catch-up move to the metal. And right now we're seeing the metal looking very constructive. It's bullish. This is a very bullish longer-term chart. We've got $50.80 resistance. That's the recent high. I think once we get above $50.80, 73 becomes the next chart-based target here. But what's kind of interesting is the metal itself looks bullish, but the miners have really undergone some technical damage. The 200-day moving average was lost in many of the mining stocks. Most of the mining stocks were in this well-defined uptrend channel while they lost the lower rail of that support. So a little bit of technical damage was inflicted here on the individual mining stocks. But as a contrarian with a 1+ year time horizon, I view that as opportunity. Could they go a little bit lower? Absolutely. But I think this makes a lot of sense to consider scaling into some of the uranium equities right here.
And before we let you go, I know we've also seen quite a bit of a pullback in the cryptocurrencies. Your take on where Bitcoin stands right now?
Sure. And I don't consider myself any kind of cryptocurrency expert or Bitcoin expert. However, I do like to chart them because, they tend to respect the technicals really well, which was a little bit surprising. So Bitcoin, you can see this this all-time high we printed at 68,958, so almost $70,000. And then we were falling in this very well-defined downtrend channel that you can see right here, lost the 200-day moving average. Then we had this bottoming candle right here, just above 30,000, and we broke out above this downtrend channel. So I think probably the path of least resistance in the short term is a retest of the 200-day moving average. If we can get back above that, it's possible we come back and retest the all-time highs in fairly short order. On the downside, that $29,000 level has to hold. If you see 29,000 support lost in Bitcoin, there could be significant downside risk from there. But I'm agnostic towards Bitcoin on a fundamental basis.
All right. Well, Steve Penny, thank you so much for your time today. If our viewers are interested in learning more, they can use your affiliate link and they'll be supporting our channel along the way. That's silverchartistliberty.com. Did you want to share with the viewers a bit about this and any last thoughts you had?
Sure, I'd love to, Elijah. And I love that you disclosed that you're affiliated, and I think it's a great partnership there because we've got a lot in common, and I think your audience is a great fit for what we offer. So we put out a free newsletter every Sunday, and we don't spam you. We try and provide tremendous value for free on par with other paid newsletters. There is the option to upgrade to a premium service. It's very low ticket, and we've got Jeff Clark as a contributor, David Brady, and that's where you get real-time alerts. You get a fully transparent, over-the-shoulder look at exactly what I'm doing in my own personal portfolio, trading ideas, and a lot more. So I would encourage everyone to go check it out, silverchartistliberty.com, and get that free letter.
Fantastic. Steve, thank you so much for your time today, and God bless.
You bet. Thank you, Elijah.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.